Hey traders, Raghi here, and for this premium video I really want to put together a step-by-step of this morning's day trade. So those of you that are new to us here have sort of the framework for how we construct trades in the morning. And one thing I really want to emphasize is sort of the slow and steady of setting trades up in the morning, because I find a lot of traders sort of get a little distracted in the last hour of the day, theatrics and sort of the heroics of taking either some sort of big rip at the end of the day or taking advantage of some dramatic profit taking at the end of the day, when really it's the slow and steady that we can establish in about the first hour after the bell rings that's going to give you the consistent, calmer, I think better structured trade. So trade construction early for day traders is really important. In fact, one of my goals is for most of you to have the bulk of your analysis done by about 10:30, your trades in by, not at, by 11:30, and then if the trade continues in your favor, you can just manage it throughout the day rather than, again, sort of actively trading it throughout the day. So I know a lot of you say, Ron, can I do like a half-day trading thing? Well, I'm going to show you how that's exactly what I did today. I had appointments this afternoon. I still was able to manage the trade. I had an afternoon session with you all. We wrapped the trade up. I think we were pretty much done before 3 o'clock, but we'll cover all that. So this premium video is really meant to be an intense, detail-oriented breakdown of today's trading, which you're going to find is going to follow the process that I look at every single day. Now, it all starts with the yen. That's probably the easiest place to start with. Now, as long as you put a check next to every one of these boxes, so to speak, that's fine. I think the easiest way to start any session is to understand if the yen is strong or weak. If it's strong or weak, that's really it. That's the first place you want to start. And I want it to either be the first or second strongest or the first or second weakest. Otherwise, it's not a clear signal. Today, we had a good degree of yen weakness. That yen weakness led us, so weak yen, okay, on the FinViz one-day relative performance had us bullish the indices, ES, NQ, YM, RTY. Okay, so bullish indices. So that's directional bias. So you'll notice in the early part of the morning, all I'm trying to figure out is, do I want to be a buyer or a seller? I'm not going to go back and forth. I want to know, am I driving north on this highway, or am I driving south in this highway? I'm not going to get on and get off different exits. Just pure north, pure south, okay? That's the way I like to trade, that confident, committed directional bias. Okay, next is more subtle things, like are we above or below the volume weighted average price? And by the way, these notes are all also in today's session notes that I sent out via alert and in the chat room, okay? Above or below the VWAP. Do we have green? Do we have red? Or predominantly blue? Like, which grab candle color is dominating? This morning it was mostly green. Not that we were devoid of the red or the blue, but it was mostly green, okay? That's bullish for us. Above or below the VWAP, above is bullish, below is bearish. So we already have the yen, okay? Now we have the VWAP, then we have our grab candles, right? We know that generally speaking, the market's been rallying, buy the rumor, sell the news. We know it's generally been rallying based on the notion that we're going to get details about this stimulus plan, which, by the way, gang, when we finally get the details of this plan and we get that rip meaning violent, fast move to the upside, we will be shorting into it. And the fact that we are at the heights we're at, I cannot tell you how excited I am to be able to put on another short. The last time we did it was when Jerome Powell and company cut 50 basis points. So I am raring to go for that short. I just need that news. I need that news to trigger that psychological rip higher in price, and then we will fade that move. Okay? Now the final part of this, and maybe the trickiest part of this, is the V-score. Okay. Now, I'm going to mention this, and I don't have many of these, but the V-score, the V-profile, and the anchored volume weighted average prices are premium tools. Okay. I don't have many. Almost everything that I do is free. I've always made most of my tools available for free. Something I developed early on in my career was the 34 EMA wave and the grab candles, and the V-score was something that I did years and years later, about 10 years ago, I'd say, sort of playing around with the volume weighted average price and standard deviations. So the V-score is premium. Now, I'm not saying you need to run out and buy it, but I am going to refer to it a lot. Okay, it's like any trader with sort of their signature tool, and this is one of mine. The rest of them, though, gang, are free. Everything else, apart from the sub-market sonar tools, which is V-profile, anchored volume weighted average price, and anchored V-score, everything else, except for those three, are free. Okay, so if you find this V-score is something that you are liking the idea of, again, it's perfectly up to you, but I will try to have price accompany these as often as I can. And that's a question that I had a lot in the chat room. All right, so what happened? And I think this is going to probably help a lot with sort of that decision making if you want to invest in this tool or not. So again, the tool was created because I realized that different price levels, different lows, did not always have the same commitment from volume. And that's what volume weighted average price studies. Volume weighted average price is something that was created by the Ford Motor Company in 1984. And it's still not really a widely used tool. It's not something that is built into a lot of platforms. A lot of people don't know how to use it. A lot of folks don't use it. So you're definitely sort of in very select company if you understand the importance of volume to direction and trend. So notice how many times we tested this -2 earlier and the variance in the price. These two were pretty close, right? But look at the variance in the price, yet we're plotting very similar V-scores. In fact, this V-score was even lower than this one, and the price was higher, which is to say, price doesn't tell us everything, gang. Volume at a certain price, I believe, tells us more than price alone. Volume at specific prices tells us more than price alone. There's a quick example right there. But all three of those were basically -2 V-score hits. All right, and then you can see our more conservative, look at that. Boom. What did that do? Lower the day. And look, and yet again, it's a completely different price level. So again, price can only tell us so much. Price plus participation, that's volume, tells us so much more. Just right there, that should tell you a lot about what my V-score does and why I formulated it to be something that's very day trading friendly. I didn't have intraday V-score even 2 years ago. I used it end of day because this is a manual calculation that I did for many, many years. I sat down with Eric last year and said, look, I want an intraday V-score. Can you do it? And he did. And he did. So, I think about, I think about all the trades I could have taken throughout my, 20 plus years of day trading where this V-score would have been such an edge. All right. So moving on. The other level that had my attention was this area right in here. Right in there. You see these lows? Right here, right there. Those are all around the -1, the -1 V-score. And that was something from 8 o'clock on that had my attention. So when we bounced off that level here, and then again here, I thought, you know what? Fearing, and yes, I will say, fearing that is all what we would get before the market ripped higher, I'd say that got me in, and therefore, because I alerted it, got you guys in a little earlier than I would have ideally liked. Was it valid? Yes. But what do you know? And this is the way we placed our stops. And when we started moving lower, hey, I totally understand. We started moving lower. A lot of traders were like, oh, wait a minute, Rog, is this okay? And I said, yeah, it's okay as long as we stay above, these V-score lows. See those two V-score lows? As long as the V-score said, don't worry about the commitment to the downside, the volume really isn't there. Yeah, the price is poking lower and lower and lower, but because the V-score wasn't breaking -2 and accelerating to the downside, what do we know? There probably wasn't a lot of commitment. And right we were. In fact, I think a lot of traders, not us, but a lot of traders got bamboozled into chasing momentum into the downside and getting short, and then boom, we see what happened. It took a little longer than I would have liked for this market to get with the program, but some of it's my fault, right? I think we did the right thing by scaling in a little bit at the -1, but I really should have been a little bit more committed and trusted that we could have gotten down to -2. So I'm glad that we did both, because if we would have taken off like this and I was waiting for -2 and we didn't get it, I would have been really bummed. Really would have been bummed. But ultimately we did, and so I want to give you guys context for what kind of unrealized loss, otherwise known as heat, that you had to be willing to take. So if you're saying, Rog, we could have scaled in a little bit at -1 and -2, and if you weren't in the room, that's exactly what we were doing live. And there is an advantage to being in the room live with me so I can walk you guys through it. A lot of folks say, Rog, if I'm on my own, I can't quite make it happen. When you're walking us through it, I feel a whole lot better about taking the trade. Those of you that are going alert only, what's interesting, a lot of you just go, okay, she did that, and you enter, and then some of you say, okay, she's out now, and you enter that, which is fine. But I would really like you guys to understand that, there was a -2 entry that was a little bit better than even the -1. So both of those were valid for us. So at that point, gang, tremendous day. This is what directional bias does for us, and this is how we did it. Okay? All right. So let me also mention something else here. Targets. The first target we took out was the target, and I sent the target out around 10 to 11 Eastern. 75.20 on the NQ and 24.47.5 on the ES. So that's a decent little profit on the way up. But you'll notice that I didn't rush. I think this is one thing a lot of traders do. When an initial entry hits the first profit target, be patient, okay? In other words, don't look for the second, third, fourth. Don't scale out too quick. A lot of traders are way too greedy on their first profit target, and they don't give themselves enough time to really enjoy a trend if it organizes. How good was this trend? After noon Eastern, gang, we had propulsion dots. We had grab candles. We had the market surfing the wave like Laird Hamilton, okay? Those of you that are into surfing, like a pro. Am I going to bail on that? No, that's the kind of structure that us trend traders love. So finally, I sent out the second target, closer to the end of the day. And one thing to remember about sort of late day heroics, look, by 2:30, I'm saying, look, let's bracket this trade. We've moved into chop. We've lost the trend. And that happened precisely here. We lost the trend. We went into chop. You can see the choppy zone. And we put a target in to the upside, and we put a trailing stop in to the downside. Okay? So what do? We bracketed the market with exits. Either a 76.90 exit for the NQ and a 75.97 trailing stop, both of which would have been still positive on our entry, or on the ES 25.50, we hit 52 and change, or a trailing stop of 24.70. We hit the top of our range, we got out. Now notice what we did not do. Last hour heroics. At this point around 2:30, 3 o'clock, right here, about 2:30 and here, right? Going into 3 o'clock and here, a lot of traders start speculating on profit taking, meaning the market might sell off, or a rip higher where the market's going to have another leg to the upside. We didn't do any of those things because at this point in time, we don't have the advantage, not in my opinion, that we had earlier in the day. Now, a lot of traders said, Rog, why would we expect to rip higher? This V score is pretty pinned. That's true, but rips higher are, very emotional things, and we could have gone higher on the V score easily as we could have gone to the downside. The thing is, last hour heroics are typically going to cost you a lot of money, all right? And I'm not going to do them. Where was the money to be made today? Really by looking at the first hour of the day, not the last. And that's what I'm going to leave you with here. Think about if you are putting a lot of trades expecting last hour dramatics and heroics from the close, and are neglecting what I would call really the easier entries in the earlier part of the day. Okay, think about that. That's something that I stopped doing many, many, many years ago and realized I haven't looked back since. Every now and then there might be some interesting trades in the last hour of the day, but they're seldom going to be better than the clarity that we get in the first hour of the day. See if that little shift makes a difference for you, and I'll see you in the next update.